All right, let's get right into it. Today, we're tearing down the Q2 2025 earnings for MGP Ingredients. Now, you got to remember, this company is really playing in three different sandboxes. You've got the spirits they brand and sell themselves, the base spirits they make for other brands, and then a whole separate business in specialty food ingredients. So let's see how they did. Okay, so here's the big head scratcher for this quarter, and it's a situation you see all the time on Wall Street. MGP Ingredients came out, and they delivered results that pretty handily beat what all the analysts were expecting. So why did the stock tank on the news? That's the puzzle we're going to solve right now. And this just lays it out perfectly, doesn't it? On the left, you've got the good news, a clear beat on sales, a clear beat on earnings. And on the right, the market's reaction, sending the stock down almost 4%. Right away, that tells you the headline numbers are not the whole story here. To figure out what's really going on, we've got to pop the hood. So let's start with the good stuff. The part of the report that, in a vacuum, should have had investors pretty happy. And that's how the company stacked up against Wall Street's targets. Now check this out, because the size of the beat is what's really important here. The company posted adjusted earnings per share of 97 cents. The street consensus, that was way down around 65 cents. I mean, that's not just a beat, that's a blowout. Revenue also came in nice and strong at $145.5 million, well ahead of the nearly $140 million analysts were looking for. So on paper, a really, really solid quarter. But here's the other shoe dropping, and it's a big one. While MGP crushed this quarter's expectations, if you compare it to the same quarter last year, you get a completely different picture. Revenue was actually down 24% from last year, and adjusted EBITDA? That fell off a cliff, down a whopping 38%. So you see, the market isn't just looking at today, it's looking at the trend, and that trend is pointing sharply down. And to really get why that trend is so negative, you have to break the company into its core parts. MGP isn't just one single business. It's really a story of three very different segments, and each one had its own journey this quarter. Let's dig in. So this chart gives you the lay of the land. You can see branded spirits, that's the stuff with their own labels on the shelf, is the biggest piece of the pie, bringing in over 41% of sales. But the one you really need to watch here is that 34% chunk from distilling solutions. Because as you're about to see, what happens in that one segment has a massive impact on the entire company. And boom, here it is. This is the number that just wrecked the whole report. Sales in their distilling solutions business, the part that makes whiskey for other people, absolutely plummeted. Down 46% compared to last year. Let's be clear, that isn't a dip. It's a crater, and it single-handedly dragged the entire company's results into the red. This is the number that sent investors running. Now, on the flip side, there was a genuine bright spot. The ingredient solution segment, this is their specialty proteins and starches for food, it actually returned to growth. It posted a solid 5% increase in sales, and that's important. It shows that the entire business isn't broken and that they can execute well in a market that has nothing to do with spirits. And finally, we have the biggest segment, branded spirits. It was down a little bit, about 5%. But you have to look inside that number, because the company's premium plus brands, we're talking about their higher-end, more profitable stuff like Penelope Bourbon, that part of the portfolio actually grew by 1%. This is a huge proof point that their big strategy, shifting towards the fancy stuff, is actually working. So, given this absolute storm in one part of their business, what's the game plan? Let's take a look at the strategy and the guidance that management laid out on their earnings call and see how they plan to steer the ship from here. Okay, this right here is a huge vote of confidence. Even with that massive headwind in the distilling business, management came out and reaffirmed their full-year guidance. For sales, for EBITDA, for earnings per share, the whole shebang. What that tells investors is, hey, this rough quarter wasn't a surprise to us. We knew it was coming, and we still think we can hit our numbers for the year. We also got our first real taste of the new CEO, Julie Francis, and her vision. Her message was super clear. The future is all about becoming a brands-led company. That means doubling down on their own successful brands like Penelope and just being excellent at the nuts and bolts of running the business. This is the new direction she's setting. So if we boil it all down, what's the playbook? Well, first, they're getting smarter with their ad money, focusing it only on their premium brands that are winning. Second, they're not just sitting back on the whiskey inventory problem, they're actively working with customers to manage it. And third, they are absolutely all in on that shift to premium spirits. That's where they see the growth and the profits. Now, it is absolutely crucial to understand that the issues we're seeing in MGP's distilling business, This is not happening in a bubble. The entire American whiskey industry is staring down a pretty significant challenge right now.
And that challenge has a name. It's called a brown goods oversupply. What that means, in simple terms, is that after years and years of a massive boom, there are now just too many barrels of aging whiskey sitting in warehouses all over the country. There's a glut. And when there's a glut, brands don't need to buy as much new whiskey, which hits a company like MGP right where it hurts, with less demand and lower prices.
And wow, if you want to see what that industry headwind looks like in stock chart form, here it is. Over the last year, MGP stock is down a staggering 65%. Now compare that to the broader consumer staples sector, the VDC ETF, which is so flat you can barely see the bar. This just shows how severely this very specific industry problem has punished this one stock. So after weighing all the good, the bad, and the very, very ugly, what's our final call? It's time to put on our analyst hat and make a prediction on where things go from here. First up, our prediction. And this comes straight from management's own commentary on the call. This brown goods oversupply problem isn't going away tomorrow. They explicitly said they expect these tough conditions to last well into 2026. This isn't a quick fix. It's a long-term cycle the whole industry has to sweat out. So what does that mean for the stock price? Well, in our view, it means the stock is probably going to be stuck in neutral. It'll be range-bound. Without a clear catalyst on the horizon to turn that massive distilling solutions business around, it's really hard to see what would drive the stock meaningfully higher from here, even with the good things happening in the other segments. Which brings us to our final rating, market perform. Look, MGP is really a tale of two companies right now. On one side, you have a smart, brand-focused strategy with solid execution in their branded spirits and ingredients businesses. But on the other side, you have this massive, persistent industry storm that's just hammering their distilling business. Until that storm passes, we think the stock will likely perform in line with the market, but it's not going to be an outperformer. And of course, just a reminder, this analysis is for informational purposes only. It is not financial advice.